Hey guys, welcome back to another Talk Finance Quick Update. My name is John, and today we will be discussing Stag Industrial's earnings for Q1 of 2023. But before we get started, I wanted to start with a quick joke today. That goes, an economist, an accountant, and a lawyer decided to gamble. And that's how stock markets came into existence. Ouch. How about why are nudists bad for the stock market? Because they are associated with bear markets. Okay, fine, let's get started. As always, if you are new here, I would like to provide you with some information on the company before we dive into the financials. Stag Industrial is a real estate investment trust focused on the acquisition and operation of industrial properties throughout the United States. By targeting this type of property, Stag has developed an investment strategy that helps investors find powerful balance of income plus growth. And Stag Industrial has done just that by giving shareholders a 170% share price return since its inception in 2011. And that is not accounting for dividends. Their current enterprise value is $8.7 billion. They own 111.6 million square feet of rentable space, and they are in 41 states. And they also own 561 buildings across multiple locations. Now to Stag's first quarter financials of this year. Stag reported new record levels of leasing spreads and same-store growth in the first quarter. Propelled by their momentum from 2022, they expect longer-term macroeconomic trends, including continued strength in demand drivers such as supply chain reconfiguration and outperformance in particular industry sectors to fuel ongoing accretion from their assets in 2023. In other words, they expect companies to continue to need or even expand their need for more warehouse or industrial space into the near future as they try to have more control over their supply chain. Stag reported 28 cents of net income per basic and diluted common share for the first quarter of 2023, compared to last year's first quarter of 30 cents. They reported $49.4 million of net income attributable to common stockholders for the first quarter of 2023, compared to $52.8 million for the first quarter of 2022. Now, for one of the most important things for REITs, their FFO, or funds from operation. Stag achieved 55 cents of core FFO per diluted share for the first quarter of 2023. That is an increase of 3.8% compared to last year's first quarter, which came in at 53 cents. That means that Stag has not only been able to increase its funds from operation year over year, but it has managed to stay consistent in most economic times, even with higher interest rates, which make it harder for Stag to expand at a faster pace. It produced a cash NOI of $132.6 million for the first quarter of 2023. NOI, by the way, stands for net operating income, in case you were not aware. It is a profitability metric typically used in real estate to measure a property's profit potential. It is also used to measure the amount of cash flow that a property generates after all expenses have been deducted or have been paid. Okay, so back to the numbers. Last year, it generated a cash NOI of $122.9 million. That is an increase of 7.8% for this year. Another important thing to note when looking at a company's financials, especially a REIT, is their cash available for distribution, which in this case we can see why Stag Industrial is becoming such a strong dividend payer. It produced cash available for distribution of $90.1 million in Q1 of 2023. That's an increase of 9.3% compared to Q1 of 2022. So for the most part, investors should rest easy knowing that Stag continues to not only have the funds to pay its dividends, but they are also increasing those funds. One last thing I wanted to show you from this quarterly report is that they achieved an occupancy rate of 97.6% on the total portfolio and 98.1% on their operating portfolio as of March 31st, 2023. That means that most of their properties, 98.1% of the properties that are rentable, are rented. And 97.6% of all properties they own, whether they're putting them out in the market to rent or not, are rented. They had some leases coming up, and so far they're at a 74% retention rate, with 9 new leases and 32 tenants that re-signed their lease for an average weighted lease term of 4.5 years. It seems that although they aren't expanding as fast this year with new building acquisitions so far, they are making up equity through increases in rent. And lastly, let's look at their share price so far. As you can see, as of close on Friday, they are currently trading at $33.87 a share and have been trading flat for the past month. But most REITs have been in a similar situation, especially with the increasing rates. The great news is that Stag's financials look healthy and growing. They are also in the green for 2023 and have remained pretty steady when it comes to their share price. My shares of Stag are still in the green since my average price sits around the $30 mark. Although I would like to buy more shares of Stag at the moment, I believe there's a few other stocks in my portfolio that are a bit more undervalued that I would like to purchase more of first, since I do own a large amount of Stag in my retire early portfolio. Although I will never tell you to buy, sell, or give you any specific advice about a stock, I would like to recommend you take a look at Stag Industrial. If you found the video informative, consider giving the video a like and give the channel a follow by hitting the subscribe button. See you on the next one.